Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is June 13, 2018. I'm going to talk about Hogs here today, lean Hogs. HOGS is the ETF. It's something that you might want to start looking at. We've got a mixed bag here, but there is some strength that is being shown here in the Hogs with the short and intermediate to the upside, and then kind of a mixed bag here in the longer term. We've got a mixed bag, which is typically a good thing for the technical rating because it means that the market is in limbo and ready to make some type of a big move, and quite honestly I think we've seen that today. So the seasonal tendencies are telling us a different story where they're actually pointing to the downside, but we have broken through some resistance, and that's what I want to show you with Hogs. We'll first start off here with just a general overview. Here is a weekly bars for Hogs. You can see the market had been coming down for quite some time. It's been in a consolidation mode for quite some time, and with this week we're starting the process of breaking out to the upside. We're working off of a wave low, which is on weekly bars, and I think that what we're going to see is the power level is going to start to base and start to head a little bit higher. It's a slower indicator, but it is something that will eventually start to head a little bit higher, and I think that we're poised for hopefully some type of a good move here, despite the seasonal tendencies, at least for right now. If we look at the daily bars, you can see that with today's action having broken above and staying above the 50-day moving average, we've come up to, or at least approaching, a little bit of resistance to the market. But the key here is that we're still working off of a very strong base here, and we've got a lot of potential energy here with the market really in a position to really start to rally to the upside. Here is a system, a daily system that had been short as of late January, and it finally liquidated itself with this move that we had here today, generating a pretty good profit. One day I'm going to do a presentation on the evaluation of a system. I helped to create this particular report, but this point in time, we just liquidated it with a little over $5,000 with this particular system here, and right now we stand with the market, Hogs as a whole, 100% long. There's no hedging going on, and we have three systems that are taking advantage of that bit of a breakout. So we've got really good bias here. Here's a chart that I don't always show. It's kind of a seasonal breakdown, or excuse me, a systematic breakdown, long, short, and hedged. You can see that of all of the markets that are active, we have the most, at least on the long side, that are in the hog market, 3 long. So it's looking for something to really take advantage of this particular move. So let's see as to whether or not, if I flip back to the original screen here, let's see what happens with the resistance that we have here at 80.68. Let's see if or not the market's able to break above that, given this sideways consolidation, a little pent-up energy. You can see that the energy level, this green line, is below the yellow line, and has been for quite some time. It's been basically mirroring this lower level, and that just simply tells you that you're in a sideways, low energy type phase. And if there's one thing we know, when the market has low energy, eventually it's going to break out, and perhaps we're seeing that right now in the early stages, and typically means that the market has some potential. So watch this support level. If we fall back for any reason, then we're going to remain in this consolidation phase. Otherwise, a breakout above this, a legitimate breakout above this, then our upside targets would be these two levels here. I'll take the larger of the two. Basically 86 is where the next resistance would be if the market is able to actually rally. Watch the 200-day as well, but that would be our target. So let's see what happens here with Hogs. I'm kind of excited for the potential for this particular market, and we will take a look at another market tomorrow. Thanks very much.